From the floor of the CME Group, this is Danny Riley on this Thursday, January 21st. You know, look we talked about this yesterday, that the markets were really in badly need of a sell-off, and today we've got it. It's been compounded by a lot of different things. One was the early weakness in the euro, the early weakness in the crude oil market, the early weakness in copper and gold. This has really been a huge drag on the stock market this morning, and also this stuff with Obama on TV talking about new regulations for bank trading, etc., and all this. It's really, really weighed down on the market. Look, you know, it doesn't really matter if you like the stock market or you don't like the stock market. I think everybody will agree. We think everybody will agree that the markets are long overdue for some type of correction type sell-off. You know, and a lot of the supporting economic stuff that have helped prop the stock market up over the last 6 or 8 months are starting to dwindle away a little bit. And as we go into the earnings season, you're going to be faced with some of these companies are going to report better and they're going to sell the news. The ones that don't report well, they're going to sell too. So we may be in this kind of sell mode right now where the markets are going to start to test some lower levels. Now, yesterday the S&P closed above 1127.5, and that was supposed to be a key component on the upside. Today, we rallied off that level. We opened higher. We rallied off that level, and then we puked down through it. And then we puked down through the 1125 level. Then we puked down through the 1119 level. These are all critical levels. Now, yesterday, Topstep came up, and he was talking about the 1110 level and the 1090 level. We think these are in play now, okay? And it also may be, you know, depending on whether or not we get another down day tomorrow, that if we get a couple down, 3, 4, 5, 6 down days consecutively, we'll maybe broke this camel's back.
Peter Yastrow here. We're looking at the S&P's very weak second day in a row. The follow-through continues on Obama being very, very heavy-handed. Politics and economics don't mix well, and I think everybody's starting to realize that this administration, in its zeal to try and gain votes from the non-informed, are really, really sticking it to the banks and to Wall Street in general. Unfortunately, what this administration fails to understand is that without Wall Street and without Wall Street efforts in the capital markets, then the mortgage markets and the other credit markets will also suffer. Once again, they seem to be confused about who the golden goose is and where the golden eggs come from, and I'm afraid that this administration is going to kill the golden goose that's been basically propelling our economy for the last 10 years.